best in radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
You are listening to the Financial Survival Network. This is Kerry Lutz. It's time for Manipulation Monday with Andrew Hoffman. Andy, welcome back. How are you?
Oh, I'm great. I mean, what could be manipulated about markets? I mean, with gold, of course it should be down with the absolute collapse of the PMI services, new home sales, and the Dallas Fed manufacturing survey, all within an hour's time this morning, not to mention plunging interest rates, about a slew of other geopolitical events over the weekend, the collapse of the French government, the Chinese calling the U.S. government dirty spying thieves. Nothing's manipulated the market. All-time high stocks and hit gold.
Hey, how's that for a Monday, huh?
Yeah, I put out another article last week in my ongoing multi-year sequence or series of manipulations articles. This one's called Six Sigma PM Manipulation Proof. And in this one, I said, what the heck, I'm just going to write about this one already. The 4 o'clock p.m. Eastern time close of the New York Stock Exchange, and then the 6 p.m. open of the Globex trading platform when the entire world's asleep. I wanted to see how many times the first trade was down for gold over the past 2 years. And lo and behold, it's about 70% in both cases. And in the last 2 months, it's closer to 90%.
Pure chance. What are the odds of pure chance that could be the case?
A little less than today's 61st straight Sunday night sentiment attack, which is 1 in 600. 1 in 1.1 quintillion.
Is that all?
Yeah.
Is that all? Huh? Yeah. Well, pure chance. Pure chance. There's no manipulation. These are open, transparent markets, right?
Yeah. Well, right now, as you can see, it couldn't be more obvious. Again, when we talk about stuff like 2.6%, enough said about the Fed protecting 2.6% on the downside of the 10-year Treasury yield, and what we call, again, I'm going to say it over and over again, everyone should read this article, the most damning proof yet of QE failure. It's talking about the fact that the Fed and all of the Wall Street can talk all they want about recovery, but the markets are betting globally on QE to infinity, which is why they so desperately fight so hard at 2.6%. Then it was 2.5. Now we're at 2.396. And despite just massive amounts of negative economic data this morning, they're just doing their best to keep that rate where it is. But they'll fail again, just like they failed all along. And ultimately, I maintain my view that the 10-year U.S. Treasury bond will go to zero. Zero, just like in Japan, just like it's going to in every European country, because the entire world is going to bet on QE to infinity, which of course they will get until this hyperinflation, at which point everything is going to collapse, including all those overpriced bonds.
Hey, and did you notice that Bank of America just agreed to pay the government $17 billion for all of their bad acts over the past couple of decades?
Yeah, and how much did they get just today alone in ZIRP? Let alone whatever else the Fed is doing under the table. That's the whole point. They get free money all day long. They can take it away as much as they want, but they're going to keep getting free money forever. That's what QE to infinity is. And as we know, as I've been proving in proof of the tapering mirage and many other things, and admissions by Fed governors and the secret loans that we find out, what the Fed says it's doing, whether it says it's tapering or any of this stuff, is not what it's actually doing. It's doing far more to keep the markets stable than you can possibly imagine. And it's a 24/7 process.
Yeah, it never ends. Yeah. You know what we haven't heard about lately, interestingly enough, talking about keeping the market stable, Puerto Rico defaulting. It seems to be kept tightly out of the news, doesn't it?
Yeah, again, Puerto Rico is practically a U.S., I forgot what the term is, not a
Commonwealth or something. Yeah.
And, there's a large debate going on as to whether we need to back them up. And I think it's something like $40 billion of debt. Wall Street a few months ago just foisted another $4 or $5 billion on sucker investors who have already lost huge amounts of their money. I mean, they're bankrupt. that there is not a chance in hell that anything good will ever happen there, and we're going to bail them out. And if not, then it'll just be the same kind of collapse as you see everywhere else, like in Argentina or Turkey or any of these places. And by the way, I don't want to skip over the Jackson black hole.
Yeah.
If we didn't get to it already, because it was the prime discussion of my Jackson black hole article the other day, and today's article, which is going to be called What JY and MD Said, Mario Draghi. I mean, these were some very, very scary quotes. And for anyone to think that there was anything even remotely, quote, hawkish about them is beyond my... Even if you have an agenda, you can't disguise the fact that what they said was as dovish as it was clueless.
Well, the really important thing in the world economy now, though, Andy, let's face it, is that the iPhone 6 is due out next month, right?
I don't even think anyone cares about that anymore, except for the fact that they keep the stock market up, so people go, oh, Apple's going up. It must mean people care. But as we've seen, like with Samsung's last earnings, I mean, smartphone purchases, they're getting saturated. It's no longer the hot thing anymore. It's a mature business. And the only thing that's still going for it is Apple's stock as far as a momentum play. And, that'll ultimately end in either hyperinflation or crash. And, good for Apple and the iPhone, but it's they need to move on to some new momentum thing because smartphones are passé in my view. But going back to the Jackson black hole. Now, I mean, what Janet, just so anyone who sees propaganda about how she said anything that was hawkish or incremental, she said nothing. The fact that she chose the labor market conditions that were so poor as her keynote topic, shows you just how bad things are. And when she starts off by saying the FOMC sees a significant underutilization of labor resources, but labor markets have improved, it shows you that they have no clue. All they're doing is spouting propaganda. And, you go through the other things that they said throughout, ending with, we don't really know what's going on. It's too complex for us to understand, but we're going to try really hard. And if things are better than expected, well, we'll be tighter than we hope. And if things are worse than expected, we'll be looser. We're just waiting for data. We have no idea. And that's basically what she said.
And what can they really do about labor conditions anyway? It's out of their control.
Nothing. Well, it's according to Congress and their dual mandate, that's what they're supposed to do. Maximum employment and price stability. Of course, the two of them, it's a paradox. You can't have both of those. You certainly can't have monetary policy that would promote both of those because printing money is not going to create price stability. But aside from that, it's becoming more and more clear every day that the only people benefiting from the Fed's policies are the people who get the ZERP, the one percenters, the Wall Streets that get the free money. No one else is benefiting from it. No one could care less about Apple stock at an all-time high because no one owns it anymore. All we see in the world now is inflation and a continuation of the weak labor markets that, as you say, they have no control over. And what Mario Draghi said to me was even more scary because, of course, he started out by saying the preparation for our outright purchases of asset-backed securities is fast moving forward. In other words, we're about to announce $1 trillion QE program, even though theoretically we're not allowed to do it. But then he says, listen to this. You talk about scary. He says, to the whole world, we have already seen exchange rate movements that should support aggregate demand and inflation, which we expect to be sustained by the diverging expected paths of policy in the U.S. and the euro area. In other words, he's saying our goal was to devalue the euro. And since the euro exchange rate has gone down since we announced these policies, starting with the negative interest rates, we are happy and we think it's going to be even more so. This is what I wrote about in the final currency war. All they're creating for Europe is more inflation for the people, and they're creating the becoming response of, and he's specifically talking about the Fed and the Bank of England, as well as everyone else. Of course, you're going to have Abenomics. They're going to jump in and they're going to try to devour the yen even more. And by the way, take a look at the yen. It's on the verge of really breaking down below major support. So very scary. And then he concludes by saying, we are operating in a set of conditions determined by the last financial cycle. And basically what he's saying is because there's such a large debt out there, there's nothing we can really do about it. Rates are already zero, so I don't know if this will really work. Yet we're going to do it anyway. We're going to print money and send $1 trillion into the markets. Very, very scary stuff. We're talking about the two most powerful bankers in the world, absolutely clueless and absolutely as dovish as can be.
And they have no solution for the problem because there is no solution based on tried and true policies of the past.
Well, that's exactly the point. I mean, the Eurozone has not been able to do the ECB. The ECB has not been able to do QE in the overt manner of the Fed. Remember, all the Fed swap agreements get channeled into the Fed into the European banks secretly. And of course, they did do some kind of QE, a moderate kind of QE a few years back, but they've been held up with the German Constitutional Court saying, well, you can't really do it. So they haven't been able to do everything that the Fed has done. But now the German Constitutional Court is kind of giving them the green light to do it. So they're going to do it, and they're going to do it wholeheartedly. Even just as the Fed is starting to realize, well, we just did all this QE and it's not working. So we might as well stop it, at least on paper, because we've gotten the market so high that we figure, it's okay, we'll pull it out. We're still buying all this stuff secretly. And if things get worse, we can just re-up it again. And that's exactly what's going to happen here. They're going to print and print and print in the ECB in the same manner that the Fed did. And then eventually the Fed is going to have to turn it right back around and start up with the overt QE4 and the like, and go to negative interest rates, because there's no way of winning. That's the nature of a Ponzi scheme. It must get larger.
Yeah. And it's just remarkable because all of these trillions later, now we find out the bailouts in 0809 were up to 29 trillion, and they did absolutely no good other than keeping the too big to fails on life support, right? They did no good.
Yeah. And we know it's more than 29 trillion. That's the whole point. It could be freaking 50 trillion. It doesn't matter. Look, didn't we just see that study a few weeks ago that said a cluster of central banks now own, what was the number? $25 trillion of stocks, which I think we calculated is about half of the world's market capitalization. Mm-hmm. I mean, what part of the Fed and the Bank of England, all the Japanese, heck, the Bank of Japan says we are buying stock. What part of this do people not realize? It's not the market going up. The government is printing money and buying stocks at all-time high valuations. What they think they're going to accomplish from it, I don't know, because at some point they're going to own all the stocks, and there'll be no market left at all. That's why you've had what Bill Holt was talking about, we have a 60% drop in New York Stock Exchange volume over the past decade. But that's including all of the massive amounts of trades with the high-frequency trading. There's nothing left. It's like the Japanese bond market now that has no bids on certain days, because the governments have completely destroyed markets, and they've created this misallocation of capital, all-time high mergers and acquisitions, valuations of stocks like tech stocks in 2000 amidst the worst global economy of all time. I mean, we are talking about, as David Stockman calls it, the Great Deformation. And believe me, it is in the final stages. We're not in the first or in the third inning. We're in the ninth inning. We're in the 10th inning.
Mm-hmm. Yeah, it's it looks like we're in extra innings, and you just wonder how many more innings. Are we going to 25 innings on this thing, Andy?
Well, I mean, if you can believe that with, for instance, Shanghai silver inventories down 90% in the last year to a measly 100 million ounces, since the big attack started. If you think that that's going to survive that tiny amount of inventory, with all that's going on in the world, all the demand that's increasing around the world, all the money printing, the plunging supply, well, yeah, if you think that's going to last, then sure, it'll go to 25 innings. I personally believe for a long time we're near the end, but I believe more than ever, especially with the valuations of physical gold and silver so low compared to the cost of production, compared to the money printing, the geopolitical issues, it's hard to believe that this game can be held much longer at this level.
Yeah, so then the question is, what comes next?
Well, I'd love to know. I don't have a crystal ball, though. What I do know, and that's why I work, working at Miles Franklin, I just talk about the financial part. I do know that what has happened throughout history will happen now. Fiat currencies will continue to lose their purchasing power, some quicker than others, until they're all dead. And if you haven't protected your assets, not to mention your life, if you haven't thought about what the ramifications of this could be, what the worst case can be, you're going to be in big trouble. But I focus more on the financial side. And I'm telling you that if you haven't started to consider owning some physical gold and silver, which are the only substances known throughout history, through thousands of years of history, to protect portfolios against hyperinflation, I just don't know what else is going to make you change your mind. Because once that next 2008 crisis starts, and it's coming soon, it'll be too late to do anything. Yeah, and actually, by the way, I bought some more silver this morning. We have our new, the Royal Bank of Canada just announced their new bird of prey wildlife series. They're trading silver maple leaves, trading at the same price as generic silver maple leaves, and we're talking about $20 per ounce. I mean, ridiculous that these prices are still here, and I don't believe they're going to be here for very long.
So what about the concept of Bitcoin? Because, Bitcoin really didn't take off until after the Cyprus bail-in. And I know it's controversial, and, I'm not saying get it instead of gold and silver at all. Not saying that. You know my feelings about gold and silver, Andy.
Yep.
Not beyond reproach there. But, it still is a currency, and it's transnational, not tied to the successive failure of any country's fiat currency. Might make some sense here.
Well, look, I've written about Bitcoin ad nauseum as well. I have to. I've got a lot of comments about it. Certainly when it was soaring. We had that brief, infamous time in history, which will never be replicated, by the way, when for 2 seconds the price of Bitcoin was the same price as the bottom price, the low price of gold for the year. The high price of Bitcoin, 1,200, low price of gold. That will never happen again. But again, my point with Bitcoin has always been there's two different aspects of it. There's Bitcoin, the investment, where you buy this Bitcoin at Bitstamp and you hope it goes up. And then there's the long-term concept of a currency system that trades outside of the governments and the printed money and all that.
That's what I'm talking about.
Yeah. And will that happen one day? How do I know? Well, in Star Trek, they had their own concept of having no money. Maybe it will. But one thing I'm sure of is it will be fought to the death, and it will be fought even harder than gold and silver have been fought. So if there's going to be some kind of international non-government currency, it's going to be a long slog. And in the meantime, if you quote, invest in Bitcoin, maybe it goes from 500 to 5 million, and maybe it goes from 500 to 0. I don't really know, but I couldn't warn people more to dissociate that they should dissociate the concepts of buying Bitcoin for appreciation and the concept of over time it becoming an alternative currency. And again, I'm going to use that word again. It's currency, no matter how much you slice it. And the Bitcoin, the big Bitcoin defenders, especially, they get a little quieter now that the price is down. They'll say, "Oh, it is a money because its value is based on the fact that people use it." Well, yeah, people use fiat currency too. That doesn't mean it's valuable. It doesn't have an intrinsic value, and it certainly doesn't have any history. We're talking about 1 or 2 years of history.
Yeah.
So can it gain the properties of money? Hey, anything's possible. But for me, for Bitcoin to go from currency to money is going to take, at best, decades.
Yeah, well, as the fiat currency regime erodes into history, might happen faster than you think, but I think it is sound advice.
Well,
Shouldn't be putting all your...
I will say, sorry to cut you off to finish off the topic, I did write in my year-end predictions, that was before the Mt. Gox debacle, which really set back sentiment for a while. I said, given a decline in the purchasing power of fiat currencies that I expect and rising gold and silver prices, which we really haven't seen yet because of manipulations, I said there will be a significantly greater interest in Bitcoin during that time. Of course, the year is not done yet. And as I said, Mt. Gox collapsed, and then you have had these ridiculous raids in gold and silver to keep the price down. But yeah, I agree with you completely. There is a chance that as fiat currency failure accelerates, that the movement to get interest in Bitcoin and probably to buy Bitcoin on the exchanges is going to increase. But I wouldn't speculate on it. For me personally, that's just not what I do.
Yep. Well, it's going to be interesting to see.
Yes.
It's a trend you should keep an eye on because it's important. Really
I watch
important.
it every day. Absolutely. I agree.
Totally. And, because at some point you're going to need to transact, and it's going to become, I think, increasingly hard in the future with fiat currencies. So that's the main reason that I see keeping an eye on the cryptocurrencies, because man will always find a way to do business. And just seems to me that the cryptos are going to be the way to do it. But I agree with you. It's it's dependent on so many factors that you and I can't really understand right now or grasp.
Well, it's like Jeff Goldblum says in Jurassic Park, when he says, life finds a way. Yeah. I mean, the governments could try to impose their will all they want. They've been doing it throughout history, and they've been losing. And this is the most egregious example ever of trying to impose a worthless currency on the entire world. So, the entire world is going to fight back, and it's going to be a bloody war, in my opinion, for the next system. But again, from what I do personally, and that's why I try not to get too into the Bitcoin, is my job and my goal is, and yours for the most part, is to protect people from what's coming. We'll worry about the future currency later. I wrote that article a few weeks ago, is gold money? Who cares? Because I don't really care if there's a new global gold standard in the future or if it's Bitcoin. The point is, I'm trying to preserve people's assets from what's coming, because I know that's what has always happened is going to happen, and it's going to happen in a much worse fashion, much broader than ever before.
Yeah, that really is the key. And, I've said it before on the show. It's been said the one thing we learn from history is that we don't learn from history, right?
I mean, it's human nature. It's that simple.
Yeah. And if you're ever going to learn from history, now is the time to do it, right?
I mean, it's just so unbelievable that we've gotten this far. And again, I can't speak for the eastern half of the world, which has clearly been holding up its end of the bargain of taking steps as a cumulative society to protect themselves. But how the brainwashing has been this powerful in the West, that people in Germany, in Italy, here, even in the States, where we've had multiple currencies lost to hyperinflation since our inception, how they still just don't believe in it.
I know. It's just downright remarkable. But, those who don't live learn from the past, right?
Absolutely.
And that's where we're at now. And you better start learning from the past, because this can't have a happy ending. It just cannot,
I couldn't agree more. And, who knows when we'll have our Monday chats scheduled, and it won't happen. Or it will happen, but it will be so dramatic what we're talking about that, we'll be scared to even be putting it on the air.
Yeah. One of these days, Alice, and that's why preparation's the key. That's what we've always been about here. Not about fear. Fear, there are those out there. Let's face it. You hear them all the time, Andy, and we don't have to name names, but these shows are all about fear mongering, getting you upset, and just driving you into a state of not being able to act. And we're not about fear. We're just about getting you ready so that if and when the time arrives, you're ready.
I couldn't agree more. I am here to help, and you are here to help. And, if we can make an honest penny, the two of us doing it, that's great. I mean, we happen to be in the business of helping people, and it makes me feel good.
Absolutely. On that note, find Andy's work along with Bill Halter's on milesfranklin.com, and come over to the Financial Survival Network, sign up for a newsletter, and, also got a little report coming out on how not to buy a new car. Buy a recent vintage used car with low mileage. You save a lot of money, a lot of grief, and you get, because any new car you buy, it's going to be used the second you drive it out of the dealer. So anyway, Andy, talk to you next week. Have a good one ahead.
You too.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.